You're listening to Southeast Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Challenge us at Wexford Insurances 0818 31 30 30.
I'm now joined by Ethel Deacon from Ensor O'Connor Solicitors to discuss succession planning. Ethel, you might start by telling me a little bit about your own background, please.
Well, I'm from Bunclody, people who know me, born and bred, went to the FCJ convent, did my leaving cert, went on to Limerick, University of Limerick, qualified there with a degree in law and accounting. At that time, I wanted to do law, but there was no apprenticeships. So Tony Ensor kindly agreed to give me an apprenticeship, but there was a year waiting list. So what I did was I went to Dublin and qualified as a tax specialist, put in a year there and then came back to Enniscorthy, where I've been for the last 14 years. So working with Ensor O'Connor for 14 years, and I mainly head up the wills, probate, trust and tax planning section there.
Now, the reason I asked you to come into the studio this morning to speak to us is in relation to succession planning. We do receive lots of inquiries and lots of emails from listeners in relation to this particular area, and I know it's an area of expertise for yourself. You might just explain to our listeners, what is exactly succession planning all about?
Well, succession planning is really looking into the future. So a lot of people who have businesses, it applies to someone on the very basic level if they have a house or whatever, but more pertinent for people listening today who have businesses or farms, looking down the line and saying, when am I going to retire? Is the business going to retire with me? Am I going to let it fall into the next generation? And who is that person who is to take over?
And when does this become on somebody's radar?
That can vary. Certain people, if they're planning their pension or looking into that, will say, oh dear, we need to think of the future. A lot of people might have children who've left college or that are getting involved in the business, and you can see a route forward for them or try to find a route forward for them. Or more often than not, people will come in to make their will. And during that process of, talking about their family and what they do and finding out that they have a business, we would be saying to them, well, look, do we need to make provision for the running of your business after your death? And more importantly, then people start to say, well, look, I'm not going to be there, in my golden years, who's going to take over from me? So it's a process that evolves through many different ways.
So once it does come on somebody's radar, what's the process after that?
Well, we would meet with the person. The first thing, we'd ask them to come in and give us a brief outline of their business. The first thing, I suppose, would be to identify how they operate the business. So, there are various structures. Mainly, you can operate through a limited company, a partnership, or perhaps a sole trader. So we'd look at that first of all.
What's the next step after that?
We drill down into a little bit more detail. So we would say, look at the asset structure of the business. Are their assets held in a company? Are they the owner of shares? Do they hold the assets personally? Would they lease them to the company? How long have they had them? Importantly as well is, how are they financed? What liabilities are there? Are there any personal guarantees? So generally the business structure and how it looks at that point in time.
From there, where do you go?
The next step is probably the most difficult for the person who's doing the succession planning, because you want to talk to them about their vision for the business. They've obviously, it's their baby, so to speak, so they've run it and have their own ethical way and business ideas for it. So you have to sit down with them and say, well, what's your vision going forward? And discuss that process. Normally we would sit down and we'd talk to them about all the individual members of the family. Are there some working in the business? Are there not? Or there might be some not interested. There might be some in college who could be very interested. And it's kind of an identification process of where the business is going and identifying the person most suitable, say, to take it over, and then advising the person to talk to that person and give them the skills or whatever that they're needed to transfer the business.
And what help do you give, let's say, the business owner identify the best person to take over the business?
Initially, it's a discussion process. We would then say to them, what's your role in the business? And if you've a family member in the business, what's their role? And try to match or identify the missing links. So, if you have a son coming up through the business and he might be a great accounts person or whatever, you might be the person who's the salesperson. Well, if you step out, does that son know your customers? Does he know, does he need to go on a sales training course? Trying to match the skill set so that if you want to see this business continue, that will happen. So at that stage, it's really, we might send the client away and say, look, you need to, sit down maybe with business coaches or, business advisors to give that particular skill set to the person coming along.
And once the business owner decides on the right person to take over the reins from him or her, What happens after that?
We then, I suppose hand in hand with that is what is the expectation of the person who's retiring. So what do they see their role going forward? Are they going to step out of the company? Are they comfortable to do that altogether, or step out of their sole trade or a partnership? Or do they see themselves, staying in a consultancy role, and if so, for how long? And will that interfere with their relationship with the new person coming along? What will their income be after retirement is very important, so that, can they afford to retire? And does the company need to supplement their income in some way when they do retire? So we would sit down, and once that picture is all together, then we can go to the next step of advising them maybe about restructuring their assets or whatever to avail of some tax reliefs.
That leads us on to tax. What specific taxes are there around succession planning?
When someone transfers an asset, there's mainly three taxes. There's capital gains tax for the person transferring the asset, and capital gains tax is a tax on profit. So if you have an asset and you transfer it either for money or love and affection, as they say, if there's a profit, the taxman will tax the profit, and the rate is 30% at the moment. So that's the person transferring. The person taking the asset has to think of gift tax, and there are certain thresholds over which you are taxed at 30%. So a child can inherit 250,000 at the moment. A brother, sister, niece, nephew, 33,500, and then a stranger is down to 16,000. So you have to see within those limits, is there any tax payable? And then there's stamp duty normally on the transfer of assets at 2% on commercial property. Shares is 1%. And if you're related to the person transferring, you can claim a consanguinity relief, which halves the rate.
It'll explain retirement relief to me.
Retirement relief applies to the person, obviously, who's retiring. And it's a very valuable tax relief in that it enables you to transfer your assets without any tax liability sometimes. So to claim retirement relief, you have to be over the age of 55, and you have to have owned and used your assets for 10 years for the purpose of the business. There are certain limits that apply. To transfer to a person who is not a family member, there's a limit of 750,000. Now, without going into too much detail about it, just beware that those limits are changing in January 2014, and they're coming down. Typically, as everything in the budget was cut, those limits are being cut as well. So I'd advise anyone who's thinking of claiming retirement relief just to check, 2014 is a key date to claim the maximum reliefs possible.
Ethel, one relief that seems to be well hidden in the tax code is business relief. Tell our listeners a bit about that, please. Business
relief can be claimed by the person who gets the asset, and it works in such a way to reduce the market value of the asset that they're taking by 90%. So if they qualify to the revenue conditions, they can reduce the value of their asset hugely. The person giving the asset must have owned it for 5 years. Now, I find myself, anyone who comes into the office and they are a candidate for business relief, it involves sitting down with their business structure, sorting out the assets that qualify, they have to qualify as business property, and then applying the relief to it. So it is a very valuable relief because it, again, can wipe out a tax liability in some cases, but it needs to be very carefully considered.
When considering succession planning, what other stakeholders are brought into the mix, as well as yourselves?
We would consult with, if the person has pensions or investments, their advisors in that regard. We always talk to their accountants. And also, going back to the discussion, the hard one of identifying who is going to take up the baton and run with the business, we might say, have you got a business coach or an advisor or a mentor in that regard as well?
Ethel, I know that you've been involved in succession planning for over 17 years at this stage. From a taxation perspective, what changes have you seen over the years?
Well, I've gone from 1995 watching the reliefs climb, the business relief, the agricultural relief. You used to get 50% relief, then it went to 75%, now it's 90%, to seeing them all being eroded. And whilst this budget we thought the 90% tax relief and business relief would be cut, it wasn't. But what the government did was they cut the thresholds. So where at one stage you could inherit almost 400,000 from your parent tax-free, this year it's down to 250,000, and it's a lifetime limit. So we've nearly come full circle with the tax reliefs, and I know Europe has had, they're saying that as well. I think the Commission on Taxation report recommended the reliefs to be cut because they say we have a very generous tax system here for transferring assets to the next generation.
And what are the changing trends that you've noticed from, let's say, business owners' perspective in relation to succession planning over the last number of years?
I think they've a lot more to consider now before they transfer their business, because before they may have had an external source of income, such as, their pension, or they may have had rental property. Again, with even the income tax changes and the fall in pensions, before now they transfer their assets, they have to consider, what am I going to live on when I retire? And it may be that they still look back to the company or the business that they've formed and say, well, look, I'm going to need a small income out of that to supplement my pension or whatever. So extra considerations really for them.
Just a quick question in relation to farmers. Lots of farmers over the last 10 years have leased their land out. How does that affect them when it comes to retirement relief?
The leasing of land is an issue. Because retirement relief, you must have owned and used the assets. The leasing of land obviously says someone else is using the assets, but the relief still can apply if you examine the lease that was granted and the period of ownership before the lease. That's what's key there. So if anyone has leased land, I'd always say to them, either talk to your solicitor if you're leasing land, say, look, when I retire, will this lease kick me out of the relief, or will I be insured to qualify for the relief? And it's just a matter of examining the lease, the ownership before, and having your records in order.
One final question for you in that regard, and that's, what advice would you give to anybody out there today that would be looking at succession planning down the track?
I think start as early as possible. Ideally, you'd be starting 10 years before you're thinking of leaving the business. 2014 is a key date. A lot of the tax reliefs and the limits are changing then. And, when we do succession planning, all we can do is actually look at your assets at a particular point in time and apply the current tax law to them. And it's really a question of keeping all that under review, whether you're going to retire in 2 years' time, 10 years' time, whatever. Just review everything constantly, maybe every year, with your advisors.
Well, Ethel, it's been a very informative interview. I'd like to take this opportunity to thank you for coming in and wish you continued success in your role at Ensor O'Connor Solicitors.
You're listening to South East Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Think Wexford Insurances for your business insurance.